So futures got a nice little pop initially on the jobs report. We had continuing job growth, modest wage inflation. All that's pretty good news. Fits in with the Fed's gradual rate hike scheme. Unfortunately, we're not getting a lot of energy in the sectors we really want. Financials, as Scott mentioned, did go positive, but just barely. Energy, well, look, oil went from, 65 to 74, and now down a couple dollars this week, so it's weak. We're not getting any pop from the commodity sectors. Industrials haven't done much at all this week. And basically, it's been very defensive with consumer staples and utilities. Just let me show you where the sectors are this week, and this includes the open. So utilities, consumer staples are on the upside. Industrials have been flat. Financials are down. Energy's down about 2%. Not a surprise there, considering the big run-up we had in energy and oil being off about $2 so far this week. But so far, there's been a lot of collateral damage still from the stronger dollar and the trade wars. We were talking about outflows from emerging markets for the last week or two. That's continuing this week. If you look at the EEM, the Emerging Market ETF, this is the basket of all emerging market countries. That's the white line. The last 3 months, we're down, 10, 12% just in the last month. The top line is the S&P 500. So you can see money coming out of the emerging markets, and again, partly trade, partly stronger dollar influencing that. There's one little thing I mentioned yesterday. I was talking about the metals complex. You can buy metals through the DBB. That is the metals ETF. It's a basket of copper, aluminum, those kinds of things. And look at that. In the last month, you're seeing those down. That's sitting not far from a 52-week low. Copper in particular has been affected rather dramatically in the last month, partly on the stronger dollar and partly, of course, on concerns about global economic slowdowns. Elsewhere, quiet overseas relatively. I don't normally mention IPOs overseas, but there was a big one in Hong Kong that is emblematic of a couple of things, emblematic of trade war issues and emblematic of some of the problems over in China. Xiaomi's going to go public on Monday in Hong Kong. This is the fourth largest smartphone maker in the world. We have Samsung, of course, we have Apple and Huawei. Important thing about that, they priced at 17 Hong Kong dollars. 17 to 22 was the price talk, but it was much higher just a few weeks ago and a few months ago. So they're going to price it. The value will be about $54 billion, but a few months ago they were talking about potentially $100 billion valuation overall. So they have dramatically ratcheted this down. You can't blame them. It's been, number one, not just trade war concerns. It's been a tough year in the Chinese stock market. Put up Shanghai. We're 23% off of the recent highs in the Shanghai market, and that was only earlier this year. That's not just trade war. There's some broader issues about slowing down the Chinese market. But also, we've had a string of IPOs out there in the tech field in China that have been very disappointing. You take a look at some of them down there. Now, Huawei is a hardware manufacturer, but Ping An Healthcare, which is online medical services, these are all priced in the last 6 or 7 months. Zhongyuan does online insurance. Yixin is a big car platform. Razer is a big gaming platform. So these are not necessarily hardware makers, but the tech IPOs have not done very well in China this year. So a whole confluence of events. I don't want to blame this all just on trade wars, but it's a very, very tough time for a major global IPO. We'll, of course, wait to see that start trading on Monday in Hong Kong. We're flat on the Dow right now. Scott, back to you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.